Hi everyone. If I was to simplify the investment process, what we're trying to teach and explain to people what it is that we do both in the hedge fund industry and what we do in generated returns, I'd probably put it like this now. It looks a bit complicated. What it is look, you come across a whole bunch of names, okay? You might come across them in articles, you might come across them in magazines. If you're into the business of trusting financial journalists, I mean, you've got to wonder why they're financial journalists and not fund managers, but that's an aside. Okay, but you're going to come across a whole range of names you need to assess. And what we do within our own fund, but what we teach people to do, is we say, right, which one of our strategies might any of these names fall into? We have a variety of strategies. That allows us to focus on what's relevant and what isn't. We have a checklist just to make sure we don't miss anything. Many moons ago, I got my private pilot's license. And we used to have checklists, because what happens is without checklists, you get a bit arrogant. You think, oh, I know it all. It's all in here. It's all in here. It's not. You forget very simple things and you crash and burn. So checklists are essential. We have a little Excel spreadsheet checklist to work out. We make sure we've got the right data, the right information very quickly. These are the tools and software to give us the information, just to check that for any particular strategy, does the stock name fit into it? Very simple. All this takes probably about 5 minutes. Once you get used to it, it takes about 5 minutes. Okay. Then we've got to decide, is it a quality stock or a performance? A quality stock is the type you're going to hold forever and you'll add more to, even if it falls. A performance one, you give it a time target and you give it to prove itself, and you give it a performance target to hit. And if it doesn't within the time hit the performance target, you sell it. You're only ever going to buy, sell, or hold anyway, okay? Anything. And with performance stocks, you have a stop loss. With quality ones, you don't, right? It's that simple. You can have a range of domestic stocks, exchange traded funds, and US stocks. And then you monitor that. All of that. It's that simple, okay? That's all it is. That's the process right there. That is the process used by all the world's leading hedge funds, and that's what makes the billionaires. It's as simple as that. Let me break that down. All right? Were you to use that, and were you to generate, as a private investor, you've got a lot of choice. You're not handcuffed like the big funds are to only invest in a few big companies because they've got so much capital. You've got less capital, so you can invest in a bigger range of companies. Let's say you try and therefore hit a modest 20% per annum. Why is that modest? Well, you only need to look at the performance of a wide range of companies on average over the last decade to know that actually 20% is very achievable. Almost if you had a dartboard, you'd get that. And over a period of time, your initial capital, you start off with something modest, and you add a little bit to it each year, because obviously you'll grow an income anyway from your day job or retirement, whatever else. And you can see how very quickly over 10 years, or I say very quickly over 10 years, and 10 years will fly, that gets from where you start under 100k up to a million. Or if it was 10k becomes 100k. Okay, that's the ambition. That's the goal. Just so we know what the goal is, that's the process, that's the goal. Okay, or the plan, if you want to call it that. So how does that go about happening? Well, again, you've got the process. All that's ever going to happen with any kind of stock is it's either going to go up, in which case if it's a quality stock, you buy more because you're going to hold forever. If it's a performance stock, you ask yourself, has it hit the target or has time run out? Similarly, if the market falls, is it a quality stock, in which case you buy more? As Warren Buffett did when asked, what will you do if Apple falls 20%? He said, well, I'll buy more. Simple. Or it's a performance stock, in which case you ask yourself, well, the price fallen, but has time run out? All right, simple as that. Now, the problem is most private investors have a third category of stock, which is low quality ones. Those are the ones which they don't know why they own, they don't know when to sell. Okay, they don't do any of this, they're stuck with it, they're inefficient. Even if they make money, it was by chance, okay, because the market's having to rise. So right now, as the markets are falling and their pensions are collapsing, they've got a whole bunch of higgledy-piggledy, poor quality stocks, and they don't know what to do. And usually what they do is they add to losers. They sell the profitable ones so they can add to the losing ones, and it becomes an absolute mess. And also to diversify away from their ignorance, they keep buying even more stocks, and they keep just adding and create a total mess. What we do is make sure all of that's avoided. Okay, so hopefully that clarified things for you. If you'd like to know more, a little free taster of all this I've provided on investing-champions.com. investing-champions.com. Okay, thank you very much.